Good morning. This is Monty once again. We got a slight bit of wind blowing, so what I'll do is I'll empty my garbage and retreat to a location where there's a little less wind blowing into the microphone. So we'll just make some small talk. So how you guys doing today? It's like very nice out here in sunny Southern California, Camarillo, California specifically. Looks like it's going to be a very nice day. It's very clear out, perfect weather, somewhere between, 70, 75 probably. Excuse the noise. Have to empty the garbage. What little bit I have today. Anyway, it's going to be a very nice day for those of you who want to get out and about. I think I'm going to go walking. My wife has a doctor's appointment. Maybe I'll drop her off. and then I'll probably go on and do my 5-mile walk, which I do as often as possible, definitely. But at least every Monday when I'm not in the gym, I'm walking around this 5-mile trail that I've shown a few times on Facebook or YouTube or something. Anyway, let's see. Today's an interesting day. The stock markets, just before I forget, just want to make sure we cover this in as much detail as possible. The stock market seems to be on a very downward trend. Today, it's spiking up. It's like the wind around here is spiking up. Let's see if we can get out of the wind here. Okay. Anyway, the stock market is up today. It was up like 300 points, for instance, this morning. Who knows where it is right now? Could be higher or lower. But I think that the overall problem is it's on a downward trend. Stocks, bonds, commodities, burlap, Bitcoin, real estate, a lot of different areas, unfortunately, are indicating that people are nervous, people are afraid. Okay, people typically start pulling back out of asset classes, and there's 90 of them that are definitely experiencing negative returns right now, and that hasn't happened since 1920, as we're going to cover in the article. But when you see wholesale pullbacks like this across a broad spectrum, that typically means the economy overall, and we'll probably cover this in the Economy Stupid next time. But yeah, when you have these broad-based retreats going on like this across the board, it typically means investor sentiment overall is not good. People are afraid to put their money into almost anything right now. There's very few areas where you can actually run and hide with your money and expect some sort of positive return. So when things look this dire, you typically take your money out of just about everything imaginable, maybe except cash, and you park it, and then you go take a vacation. So that seems like that's what's happening. Unfortunately, we Bitcoiners, we're not immune. We thought we were going to be immune to this recession, to this pullback and consolidation into cash. But it looks like we're just as susceptible as everybody else, which is not good because we want Bitcoin to be a retreat that you go into when everything falls apart. But a lot of speculative money is just that. It's speculative, and they're unseasoned investors. They're not quite certain about Bitcoin. They're not quite certain about anything. So anyway, we see a wholesale retreat out of everything imaginable, including Bitcoin. But if I were you, you guys out there looking at the Bitcoin for the first time, or if you've been in it for a while, I would just hold the course. I pay attention to the fundamentals when I'm investing in anything. If the fundamentals are intact and the fundamentals are solid, you don't jump in and out of your investments. You just stay put. If anything, you add more to your portfolios. So you want to take into consideration whenever you're thinking about making investment decisions, whether or not the fundamentals have changed. If they haven't, then you just stay put and go about doing what you normally do and focus on other things like exercising, just taking your family out, a day trip or something, anything. So having covered that, my name is Monty Henry, owner of DPL Surveillance Equipment. I run a full-service surveillance and security equipment company. We have lifetime guarantees and warranties on all the products, 24/7, 365 tech, sales, and customer support. We have the largest inventory of items that not only can you buy, but you can rent and you can lay away as well. We have 24/7, 365 tech, sales, and customer support. I think I mentioned that. We have the largest and growing media library, for instance. The media library, just like our inventory of used products and new products, is growing. So, check out the media library. Read the articles on Bitcoin and cryptocurrencies. Read the articles on health and fitness. Read the articles on cybersecurity, economics and finance. I think I said health and fitness. Surveillance and counter-surveillance, anti-terrorist products, and anti-terrorist technologies as well. What else? We accept Bitcoin, Litecoin, Ethereum, Bcash. And just as a side note, Ohio is the first state to officially recognize Bitcoin as a payment method for taxes. And I think this is a major breakthrough. It looks like Ohio is allowing its businesses in that state, again, to pay their taxes in Bitcoin. A lot of naysayers said there'll never be a day when any state, any official government agency accepts your cryptocurrency, garbage coin, tulip mania type of investment as a method of tax payment. And it looks like, indeed, we have prevailed. So you can pat yourself on the back. Remember, we're always going to, unfortunately, overlook these little milestones because of the overall picture looks bleak. The overall sentiment looks dire. But we are indeed making progress. The developers are definitely working on Bitcoin all the time, coming out with new, interesting features, new efficiencies, ways to lower the transaction costs, ways to speed up the transactions, ways to scale up, ways to do all these things they're working on all the time. And Ohio State is one bit of good news, definitely, where you can pay your taxes, at least if you're a business owner. Individual filers hopefully will follow suit. And maybe other states across the nation will eventually take a look at Ohio, and they'll start scratching their heads trying to figure out, what are we missing out on? Why don't we also try to get some progressive thinkers in there who are going to be taking a look at Bitcoin and taking advantage of its potential as well, in addition to settling government expenditures and payments and such on the blockchain, hopefully, eventually. So anyway, my website is newly redesigned, revamped, and we want you guys to go there, take a look around, read the articles, take advantage of all of the free resources, and take advantage of, above all, the state-of-the-art law enforcement grade surveillance and counter-surveillance equipment. Just a huge variety of spy gadgets for you guys who like to collect spy gadgets as well. Let's take a look at those companies, the Wells Fargo, Citibanks, HSBC, USBSs of the world. All of these guys are, all of these guys are the same people who are committing the majority of the money laundering, a majority of the illicit funds transfers, a majority of the violation of sanctions dealing with companies that your government says they can't deal with. They're also the same people who are doing the spoofing, doing the front running, doing the high frequency trading, doing the rigging of the LIBOR rates, doing the mortgage scandals, all of these crimes and abuses, they take place in the traditional fiat world. That's where the majority of that takes place. The billions and trillions of dollars of assets that go up in thin air and vaporize before your right before your very eyes. That is taking place in the fiat world, not in the cryptocurrency world. You got to know the difference. If you don't know the difference, go to my website and search on Bitcoin. Search on the article, for instance, the article called "Central Bankers and Federal Reserve People Have Sticky Fingers Too," and you'll get a chance to see how, if you're on the inside, if you work with the fiat, within the fiat world, you can commit crimes, and it's called a white-collar crime, and you can rob people of their future wealth, their retirement money, take all of their retirement money, 401ks, everything else from them, and not even serve one day in jail, okay? Let's take a look at this article. Investors run out of options as Bitcoin, stocks, bonds, oil cave to recession fears. Again, investors run out of options as Bitcoin, stocks, bonds, oil cave to recession fears. The failure of so many investment strategies is viewed by some as a warning of what could come following years of above-average returns. Stocks, bonds, and commodities from copper to crude oil to burlap are staging a rare simultaneous retreat, putting global markets on track for one of their worst years on record and deepening a sense of unease on Wall Street. Again, we can throw in Bitcoin to the mix also. Data show global stocks and bonds could both finish the year in the red for the first time in at least a quarter century, according to BlackRock Inc. Major stock benchmarks in the United States, Europe, China, South Korea have all slid 10% or more from recent highs. Crude oil's tumble has dragged it well into bear market territory. Emerging market currencies have broadly fallen against the dollar, and Bitcoin's price, which had a meteoric rally last year, crashed below $5,000 last week for the first time since October 2017. So I just want to reiterate that everybody is getting hurt. So don't get too dismayed if you're a Bitcoin investor. If you're a hodler, you just stay put, because when people get scared and panic, and see, this is the first time Bitcoin has been through a recession, but when people get scared and panicked, that's when you get a chance to find out how every asset class holds up or doesn't hold up. And right now, Bitcoin is not holding up as well either. But the good news is the technology, the model of Bitcoin, the developers, no one is going to be any less excited about what the future holds for Bitcoin, okay? So remember, Bitcoin typically will retreat substantially from its all-time highs. If it retreats 70, 80%, then so be it, because that's typically where it dips to before it starts the next bull run up again. And again, because we're in a recessionary environment, we want to take that into consideration too, in terms of how this new asset class called Bitcoin and cryptocurrencies performs in a recession. But just for the record, Bitcoin usually dips all the way down to a 70, 80% level before it starts ultimately making ultimate new highs. So keep that in the back of your mind. Havens such as U.S. Treasury bonds and gold rallied this fall as U.S. stocks and industrial commodities staged their fourth quarter swoon. But both are still down on a price basis for the year, reflecting solid economic growth and tighter Federal Reserve policy that have begun to push interest rates out of their post-financial crisis doldrums. All told, 90% of the 70 asset classes tracked by Deutsche Bank are posting negative total returns in dollar terms for the year through mid-November. The previous high was 1920, when 80% of 37 asset classes were negative. Last year, just 1% of asset classes delivered negative returns. So again, I just want to correct myself. I think I said 90% of the asset classes, but it's 90% of the 70 asset classes is actually what it says here in the article, for the record. 90%, but that's still pretty bad. 90% of the 70 asset classes tracked by Deutsche Bank are posting negative returns in dollar terms for the year through mid-November. And this hasn't happened again since 1920, when 84% of the 37 asset classes were negative. Moving right along. It hasn't felt like a bad year, but retrospectively, it's been a pretty miserable year. Thomas Poliak of T. Rowe Price says, the broad pullback in markets is leaving fund managers scrambling to find places to park their money, but with global growth showing signs of slowing and monetary policy expected to tighten further, few are eager to place large wagers and risk compounding earlier failures to generate expected gains. Indeed, the simultaneous failure of so many investment strategies is being viewed by some as a warning of what could come following years of above-average returns. So again, what makes this situation unique is how broad-based the weakness is across a broad spectrum of asset classes, all at the same time. It's been a difficult year, said Ed Cohn, chief investment strategist at asset management firm QMA, which continues to favor stocks over bonds. All investors, excuse me one second here. Let's see. Okay, let's see. It's been a difficult year, said Ed Cohn, chief investment strategist at asset management firm QMA, which continues to favor stocks over bonds. All investors have goals, and none of those goals can be fulfilled with negative returns. So that's a pretty powerful statement. You know, investors overall cannot tolerate negative returns. You can tolerate subpar returns, mediocre returns, but negative returns, nobody's going to stay put in any asset class. You're going to pull your money out. You're going to park it somewhere. Trust me. Few investors believe a recession, particularly in the U.S., is imminent, yet the strength of the U.S. economy has allowed the Fed to continue stepping further away from the regime of rock-bottom interest rates and bond buying put in place after the financial crisis. That has, in turn, diminished the premium investors get for taking on risky assets, pressuring a variety of markets. Well, I think there are a number of investors who won't hesitate to call this a recessionary environment, but, you know, the mainstream doesn't want to label it as such right now. So, you know, forget about the idea that if the mainstream doesn't want to acknowledge it, if it looks like, smells like, walks like, sounds like a duck, then just call it a duck. Moving right along. Hedge fund manager Pierre Anduran, who earlier in the year bet oil could soon hit $100 a barrel, saw his $1 billion Anduran commodities fund suffer its largest monthly loss ever in October. Funds that have built up large stakes in fast-growing technology companies were also stung by sharp reversals. 26 funds dumped their entire stakes in Facebook Incorporated in the third quarter, according to a Goldman Sachs Group analysis of 13 F filings, including billionaire Daniel Loeb's Third Point LLC, which offloaded 4 million shares, citing a very disappointing quarter for Facebook. So again, investors' tolerance for non-performing, poorly performing assets, that's not going to work in this environment. You're going to pull your money out. You're going to pull your investors' money out, and you'll look for something else. We're hoping that eventually institutional money will go into Bitcoin, you know, but again, people are so skittish right now that they may wait. They may just put it off. I think we're just going to have to understand that this is going to be a rocky road, and we're going to have to buckle in for the long term. And when things pick up, then we'll get hopefully some more seasoned, experienced money thrown into the Bitcoin sector. That way it will jump in and out every time there's a news article. Some contend that the market's 2018 stumbles aren't all bad. The declines across stocks, bonds, and commodities that had finished last year in the green reflect in part a healthy, albeit painful, readjustment of expectations, some investors say. A year like this, it shakes out some of the situations that were out of kilter with the rest of the economy, said Jason Pride, Chief Investment Officer for Private Clients at Glenmead Trust Company. After markets around the world soared to records last year, buoyed in part by synchronized global economic growth, but also by a surging investor optimism, we actually need to take some air out of the system, Mr. Price said. Well, again, you guys, this is what we've been saying in the Bitcoin space. We want to shake out the weak players. We want to shake out the speculative money. But, because of quantitative easing and because of the government flushing so much monopoly money into the system, it's really becoming more and more difficult to shake out this speculative, flighty type of money, no matter whether it's in stocks, bonds, Bitcoin, real estate, whatever, right? When you have trillions of dollars pumped into the economy to try to stimulate it, what happens is it's hard for the asset classes to make the adjustments. They adjust back to what's normal because it's just a whole bunch of monopoly money flushing around in the system. So it looks like a lot of the traditional markets they're confronted with the same problem that we have in the Bitcoin space. Just a lot of speculative, scared, panicky, unexperienced money flowing into each and every space. He, like many others, is betting the bull market, and the U.S. stock still has longer to run before the economic expansion morphs into a downturn. While U.S. economic data have been bumpier as of late, with the housing and auto sectors in particular showing signs of strain, the overall picture still looks solid, Mr. Pride said. I have to disagree with Mr. Pride. Moving right along. Still, even those betting on continued, if more modest gains in stocks, say they have had to take on a more cautious approach as the bull market has aged. Last year, Glenmead began paring its exposure to some of the fast-growing technology stocks that had run up sharply, betting their outperformance would fade. The feedback loop felt terrible, absolutely terrible, Mr. Pride said, recalling presentations he gave where some clients questioned why the firm had pulled out of stocks that had rallied more than 50% in the past year. That decision had seemed easier to justify more recently, with many former big hitters such as Facebook, Apple, Netflix, etc., tumbling, he said. So again, these guys pulled out earlier in the year when those guys were up 50%. That was a smart decision, considering that that seemed like that was pretty much near the top. Other firms have told clients to stay invested in stocks but take on a more defensive stance. UBS Group, AG's wealth management arm, is urging its wealthy clients to hold on to bets on the S&P 500, but with some caveats, using instruments like put options, which typically allow the buyer to profit when asset prices fall to protect against further pullbacks. Again, you can try all sorts of strategies. You can have puts against your long-term bets or something, but overall, it looks like when you go into these economic cycles, they can be long and protracted. The last bull run was long and protracted, 8, 9, 10 years. The downtrend on the cycle could be just as long, not longer. It may be shorter, but they can go on forever. Trust me. Still, the broad selling has made conditions difficult for many investors. It hasn't felt like a bad year, but retrospectively, it's been a pretty miserable year, said Thomas Poliak, head of multi-asset solutions for Asia Pacific at T. Rowe Price in Hong Kong. 2019 isn't looking to be any better either. Speaking of Bitcoin, pay taxes with Bitcoin? Ohio says, sure. State backs technology that has garnered lots of hype but failed to gain traction as a form of payment. Ohio appears set to become the first state to accept Bitcoin for tax bills, a show of support for a technology that has garnered lots of hype but failed to gain traction as a form of payment. Beginning this week, Ohio businesses will be able to go to the website ohiocrypto.com and register to pay everything from cigarette sales taxes to employee withholding taxes with Bitcoin. Eventually, the initiative will expand to individual filers. The idea to accept the digital currency for taxes came from State Treasurer Josh Mandel, who had held office since 2011 and started taking an interest in Bitcoin several years ago. Mr. Mandel, 41 years old, views the new program both as a convenience for filers and an opportunity for planting a flag for Ohio and the currency's adoption. I do see Bitcoin as a legitimate form of currency, Mr. Mandel said, adding that he hopes other states will follow suit. Bitcoin was intended as a currency that didn't require government backing or support when it was introduced 10 years ago. Although it has had success as a tradable asset, it hasn't gained broad acceptance as a form of payment and has been dogged by concerns that it's used to pay for criminal enterprises. Ohio's move wouldn't give Bitcoin legal status, but it would be a kind of tacit approval Bitcoin has so far lacked. Tax offices accepting Bitcoin does help send a message that Bitcoin's a technology that can be used by anybody, by bad guys, but also by the government, said Jerry Brito, the director of Washington, D.C.-based research firm Coin Center. I just want to add that, the negative commentary here has already been addressed substantially, particularly in, I think, there's a website called BitcoinObituaries.com, where every conceivable dire Bitcoin defeating idea has been thrown out there and recorded, and Bitcoin is still here, and it's going on 10 years, it's going on a decade, so keep that in mind. Arizona, Georgia, and Illinois have considered Bitcoin for taxes, but bills addressing the issue have stalled in their state legislatures. Mr. Mandel, who is in elected office, said he can direct his office to accept Bitcoin without approval from the legislature or governor. Ohio filers would technically send their tax payments to an Atlanta-based payments processor called BitPay, which will then convert the Bitcoin to dollars for the state treasurer's office. It isn't clear how many businesses will take advantage of the service, though Mr. Mandel said he has heard from companies asking for it. Other states are starting to see Bitcoin and its underlying technology, blockchain, as a way to attract talent and capital. Wyoming Governor Matt Mead this year signed legislation to loosen the state's regulatory environment and make it attractive for blockchain-based businesses to register and operate there. New York developed regulations for cryptocurrency businesses called the Bit License. Delaware 2 years ago began a program to use blockchain technology within its corporate registry services, though the initiative lost steam after Governor Jack Markle, who championed it, left office. Ohio's Mr. Mandel is confident that won't happen after his term ends in January. I'm confident that this cryptocurrency initiative will continue, he said. So, I think the major point or emphasis is based upon those states and cities and jurisdictions that are committed to the long term and who understand that this is going to play out over years, and that the sooner these states embrace it, like marijuana, deriving so much tax revenue from marijuana sales is not something that people question now. They can clearly see, based upon Colorado, based upon California, based upon all these other states, and I don't think Bitcoin is going to be any different. At some point, it's not going to be a questionable thing. It's going to be a matter of who's taking advantage and who's reaping the rewards and the benefits as compared to who's not. The efficiencies of the blockchain, the rewarding of the miners with Bitcoin when they do secure the blockchain, when they make sure it's redundant and running in a decentralized peer-to-peer, censorship-resistant, borderless, permissionless fashion, that makes all the difference in the world. So, as we like to say at the conclusion of every podcast, you guys, keep your eyes and ears open, and stay safe out there. And have a good day. Thanks, and take care. Bye.